This here is a recap from Friday's price action for the S&P 500. I had my entry here mapped out. I didn't like price action on Friday, extremely low volume and really nothing to do on the opening 5 minute. Did provide a nice little bottoming potential pattern right there, which I did not take a position in. Like I said, it was Friday. Didn't like anything as far as the volume coming in on the open. Even up until I think it was almost 3 o'clock, we were at barely 22 million shares. At that point, it was the lowest volume day in about 3 years for the S&P 500. So just told me there was absolutely nothing to do there. Now, as it closed out throughout the day, the volume actually doubled. This spike in volume at the close doesn't even begin to show what came in after hours. You had another spike of 3.5 million, and over here was 4.5 million, and another almost 2 million there. So volume doubled pretty much the last 15-20 minutes of the actual trading day and the close and after hours, which is kind of shady in my opinion, but we'll see what that actually translates into going forward on Tuesday. None of these levels actually triggered me into any kind of positions. Like I said, I did not like the price action and the volume on the open here for Friday. So going forward, still have some valid levels. All I really need to do is I'm going to go ahead and move these levels over here, and we'll be watching for any sign of a confirmed 5-minute green over green candle at or near these levels within my risk tolerance. And basically I'm giving this about a 10-cent range above and below this level, 10-cent range above and below here. This one doesn't really apply anymore, so I'm going to go ahead and take these notes off of there. We have still pushed up pretty strong, holding to the highs. I wish I could get these notes off of here without taking them off this one. Thinkorswim did some update where you can no longer take them off just one chart, but anyways, let me see if I can hide them. And it doesn't even let me hide them anymore, but anyways, on the daily chart we now have an inside candle here, green candle inside of Thursday's range. Like I said, very low volume, could potentially be a trap trade where anyone who is shorting against these highs, their stop is going to be here. Above there would likely have to close, and on the same token you have longs are going to have their stops just below here, and at worst case scenario just below this previous wedge breakout. So going forward, I will have a breakout trade to keep in mind for a continuation up off of the open. If it gaps up, I'll wait for a slight pullback into VWAP or my 8-period exponential moving average here. But essentially for a breakout, I will be looking for a move ideally above 242, but I want to get in a little bit below there in case it does start to run from a little bit lower than that point. So I'm going to go ahead and cut this price action right here. I'm going to chop through it and just draw this little bit of a wedge. You can see showed some strength as far as the sellers right there, then came up, tested it, pierced through it, closed above it, and now it's kind of a battleground. And the same thing for the lower end of the range, now has a wedge. So this is a great pattern to trade against. So I know where I'm wrong, where to wait, move out to something else. So I'll be looking for a long above 41.84 and stop just below this pattern. And any kind of trigger in there, target would be around, I'm going to call it the next round number up of about 243.